Hello, everybody. Ryan Haley here with Atlantic Shore Sotheby's International Realty. Welcome to another edition of the Running Real Estate Podcast. And today I wanted to talk about another topic that maybe some people avoid, some real estate agents avoid, and or have a difficult time explaining, as it's not one that many people want to talk about, especially when they have a seller that's thinking about selling, they're almost ready to go, and then they find out about this withholding tax. Yes, that's correct. It's the non-resident withholding tax. What does that mean? Well, this came out from what I recall, maybe in 04 or 05, and what it was imposed that upon every real estate transaction, upon every sale, where the seller is not a resident of Maryland, the state would withhold a portion of their total payment, their proceeds in essence, from their sale until they filed a Maryland tax return. And in the beginning, when it first came out, the percentage that they were using was 4%, and it has since gone up over time. And for the last few years, it's remained constant at for a individual non-resident seller, the state of Maryland is going to withhold 8% of the total payment to you at time of closing until you file a Maryland tax return. So what is this? What does this mean? Is this a tax on Ocean City? Is it a tax on people from out of the state? Well, yes and no, kind of. It just so happens that here in Ocean City, we have the greatest number of owners who do not actually live in the state, so it affects us a little bit more. But what it really is it's the state portion of the capital gains tax. So what was happening was people were selling their property, possibly here at the beach, and when they sold it, they'd go back to Pennsylvania, they'd go back to New Jersey, New York, Virginia, and they would never file a Maryland tax return and pay the state portion of the capital gains tax. So Maryland wanted to put in a measure to be able to ensure that that state capital gains tax actually stays in the state. So by doing the way they could get this done and to be able to make sure that they could get their hands on it was to withhold it at the time of closing. So like I mentioned, this has gone up over time, and the way it's calculated is as a seller, you're going to sell your property. And you're going to have closing costs, i.e. commissions, transfer taxes. There could be some additional costs of sale, maybe a seller credit. And so you have your sales price minus all of those closing costs, minus any liens or mortgages on the property. And whatever is left over is called total payment to seller. And that's what gets multiplied times the 8% for an individual and 8.5% for an entity. And then the state's going to withhold that and ask you then to file your Maryland tax return. And when you file that Maryland tax return, you're going to be able to factor in your actual basis in the property. That is what you paid for the property. And you can add in any closing costs at the time that you paid or the time you purchased it. You can also add in any capital improvements to build up that basis. So what I'm saying here is that the withholding tax is not actually what you owe as far as capital gains tax goes, but it is an amount that they can get their hands on, which is substantial enough to get you to file the actual tax return. And at that point is when you can really kind of beef up your basis and get a true, accurate depiction of your basis. So your tax liability a lot of times is less than what is withheld. Now, instead of waiting to file the tax return, there is another way to kind of bypass this or get through it sooner. And this is where we come in as real estate agents to assist you in this process. So one of the first things I do when I have a seller is I ask, where are you from? Are you a resident of Maryland? And if not, then that flags me to talk about this form, which is the MW506AE. And this is the application for certificate of full or partial exemption of the non-resident withholding tax. So first off, this is for non-primary residences, obviously, because if you're a primary resident, you would be a resident of Maryland. So it's a second home and or investment property, which this applies to. You're going to fill this form out. And by doing this, you're actually partitioning or reaching out to the comptroller for the state of Maryland to ask for either a full or partial exemption. So you can actually go through this process while we're under contract. So you're gonna fill out an addendum that states that you realize that you're a non-resident and you could be subject to the non-resident withholding tax. That'll be the first thing that gets done when you list your property. Then when we have it on the market, we're successful, we get a contract, it goes under contract. Now the next thing we'll need to think about is the fact that you're going to have to fill this form out along with any supporting documentation and submit that to the Comptroller's Office for Maryland. Now, the key here is that when we go under contract and you fill this form out and you fully apply, we need to make sure that we have at least 21 days from the date you apply until we go to settlement so the state can issue this partial or full exemption. And essentially what we're doing by going through this process is it's not an estimated withholding. It actually will take into consider your basis and should give us a number that's very close to what you actually owe. So the questions on this form are, you got to figure out what you paid for the property. So your original settlement sheet is going to come in very handy here. What did you pay for the property? What were those closing costs that you had at that time? Then, what were your capital improvements? What did you do to your property to improve it? Did you put a new kitchen in? Did you put new floors in? Did you update the bathrooms? Did you change out the furniture? Were there any special assessments that you paid over and above your condo fees? A lot of these items might be able to be factored in to come up with a total capital improvements during your ownership, and that gets added onto your basis. Now, what I would say is I'm not an accountant, I'm not a CPA, I'm your real estate agent. I can help you fill this form out, but my clients who had the greatest success have been able to take this form and get it to their accountant, get it to their CPA, look back through their tax returns, and fill it out properly. So you have your original settlement sheet, you've got your closing costs when you first purchased it, you've got all the capital improvements. I'm going to help you put together to obtain a new settlement sheet from the property or from the contract you have today, which will show the sales price and your closing costs there, which come into place. And that will help us to come up with an actual basis in the property, which then gets multiplied times that 8%. And that's truly what you would owe as opposed to this random withholding based on your payment to seller. So that process, when we get through it, the comptroller will issue a certificate to the title company. And then the title company is going to collect the exact amount or very close to exact amount from your proceeds at closing. And that actually puts you in a much better position because now you don't have to worry about having to work on this after settlement. You've made good with the comptroller. You've given them what they need. So it sounds like a lot. It is a little confusing, but I would say this. If you are not a resident of the state of Maryland and you're thinking about selling, let's have a conversation early. Let's have a conversation as to what this process is going to look like. Because once again, I can help you get this form. I can point you in the direction of the comptroller's office. There's like one gentleman who does this for the entire state. We can get you connected with them to try to answer any questions. And then we can also work in conjunction with your CPA/tax advisor to ensure that we are ready to go and you know what your ballpark liability is going to be before entering into the listing, which puts you in a much better position so you know how you're going to be able to negotiate once we are on the market. So there you have it. That is the Maryland non-resident withholding tax and a brief surmise as to how it could affect you if you're selling in Maryland. Like I said, if you want more information on this, this is a topic that I deal with every single day. I love to share my experience with you. Please share this with a friend. If you know somebody who is a non-resident thinking about selling, like this, subscribe to the channel, like this podcast, subscribe to this podcast because we're going to bring you additional information like this on a weekly basis. And in the future, if you have topics you'd like me to discuss, please reach out to me. Let me know what those are, and we'd be happy to discuss them and possibly even get a guest on here to talk about them as well. So thanks again for tuning into the Running Real Estate Podcast. We'll see you again here next week. Thanks again.